Hi, this is Nicola from Bloom Solopreneur, and this is the final part of our tutorial series on the My Financial Life spreadsheet that we've created. First part was just an overview of all of the areas within the spreadsheet. Part 2 was about budgeting. Part 3 showed you how to work with the assets such as savings and shares. And this part is about liabilities, so debts, how to look at a debt overview, debt calculator and debt tracker. So let's dive straight in. We have a debts tab. This gives you an overview of the debts that you have. So as you can see in the chart, each segment shows you which type of debt it is, and it gives you a total here of what the debt is. So if I just add another one, say for mortgage, and the type of mortgage, and let's say £100,000, then the pie chart changes and we have a total debt now of 104,500. If we go to the finance overview, which is the main dashboard, we'll see that this is also included now on the main dashboard. So the mortgage is included along with the other debts, and your total net worth, which was 189,350, is now gone down. So if I just take that out just to show you, take that value back and go back to the overview, we'll see that we're worth that. So the net worth is the total of your assets minus your liabilities. So this overview tab of the debts is really just to keep track of the net worth and showing it on the dashboard. If you don't need to see an overview of your debts, then you don't need to fill that one in. The next tab to cover is the debt calculator. This tab is there to help you work out what your best route is to pay off your debts, whether it's the shortest route or the most economical route is up to you, and it's based on how you use this calculator. As you can see, we have pre-populated the calculator with an existing debt, which is a loan, and this loan is for £5,000 at an interest rate of 5.25, which gives us a minimum payment of £21.88. So that's the minimum payment that just pays the interest. So it doesn't pay off the debt, it's just paying off the interest. And then we can add in additional payments to work out how long it's going to take us to pay off that debt. In the top section of the tab, we have an amount from the monthly budget that we've allocated to the debt. So if we go to the monthly budget tab, we can see that within here we have a row for the car loan, which is £115, which equates to what we're seeing here. So with that £115, £21.88 of it will be paying the interest, so £93.18 is an overpayment which will go towards paying your debt. So by paying that £93.12, it will pay off the debt in 49 months, which is nearly 2 years, and cost £6,700 odd pounds. So that covers that. Now if we just add in a couple of extra loans just to give you an idea, this top section of the calculator is just information, so you can put in what you like. It's not going to impact the calculation in any way whatsoever. We can select it is going to be a credit card loan. This one is going to be 18.25%, and this one will have at 12.5%. We'll have the amount that we're in debt by for the same amount, so that you can see that the higher the interest rate, the higher the minimum payment that you have. So for the 18.25% debt, we have £22.81 to pay off every month, whereas 15.63 is the amount we have to pay for the 12.5 0% card, and this is just to pay the interest. It's not actually to pay off the debt, it's just to maintain an even kilter. So as you can see from adding in those debts, it's increased the minimum payment amount to £60.31. So to maintain those debts, it's now costing us £60.31, which is different to the £21.88 that we had originally. Therefore, the amount available to pay off the debt has gone down to £54.69. We've still got £93.12 in here, which is why we've got red figures in these sections here to indicate that actually what you're paying, you haven't allocated enough money in the budget. So if we go to the budget, we can add a new row in there. Now you can add as many debt rows as you want. The calculation will work out your total amount for the debt category rather than doing it individually. So you can have it in one row, or you can have multiple rows for each of your loans, whatever works best for you. In this one, for ease of data entry, I'm just putting one row, and I'm going to say that we are going to spend 240. Actually, if I take that out, at the top of the monthly budget, you can see that we've got an income of £3,000. The budget so far is £2,155. So we've got a surplus of cash of £845. So quite simply, we have extra that we can pay into that debt if we want to. So if I put 240, the surplus goes down to 605. And we're still okay. Now, if you haven't got that surplus, then you need to look at all of your categories to see if there's any way that you can reduce your spending to allow for the debt to be paid off. So we've now got 240 there in our budget. So if we go back up here, we've got a budget of 355, so that includes the car loan payment as well as the 240, and we're back in the green again here. So what that's looking at is £294 we have available to pay off the debts. Now that's in total for all of the debts. Now we've already allocated £93.12 there, so we've got roughly £200 left to spend on the other two debts. So if I just put in £100 in both of those, that's going to show me that within 14 months I will pay off that first debt, and the amount that I'll be paying is over £2,000, whereas in the second one it will take me 15 months at a total of 1,837. So in this instance, both of those are being paid simultaneously, so within 15 months you've got that payment paid off, and it will be roughly £3,876 that it's costing you to pay off the debt if you do it that way. An alternative is to say pay off the debt with the highest interest rate. So the full 200 could go in there. Let's clear that. Which means that that debt will be paid off in 8 months at a cost of £1,965. So that's a saving of, I can't remember what it was, a bit of a saving already, because it was definitely in the 2,000 area. So you're saving money by paying it off quicker. Once it's paid off, you can take that full amount of £221 and pay it into the other loan. So £221.81, and then clear out these debts because they no longer are applicable, and that then is paid off in 7 months. So it's a total of 8 months plus 7 months, so again it's 15 months, and the cost is £1,500. So I think the saving, you save about £300 by doing it that way, by paying off the higher interest sooner than the lower interest. But equally, you can do it so that simultaneously, so that you can at least feel that you are getting somewhere on all of the debts. It's really up to you, but the calculator helps you in some way to work out what's the best route for paying off the debts and how long it will take and how much you'll pay. So the final tab to go through is the debt tracker. This really just monitors the payments of any debts that you have. So if you've used the debt calculator, which I covered previously, then the debt section, the debts to track section, is pre-populated with the information that you've already entered. If you haven't used the debt calculator, that's fine, and you just overwrite the values that are in there with whatever data that you want to record. So in this instance, we've got a car loan set up, of which we're paying £115 a month. We've been paying it since January. So the total that we've paid so far is £575, and the total left to pay is £4,425. This is shown graphically on this chart here, so it shows you how the debt has been reduced. If we now want to put in the payments for the other two debts that we have, so we've got £122.81 that we're saying we're paying, and then in this one it's £115.63. Then again, it'll show you, so this is for May, it'll show you that you've made those payments. It'll subtract it from the total, I'll give you the total left to pay, and it will modify the graph. This graph is also on the dashboard, so you see it here, so that the dashboard is giving you an overview of everything that you have. So the debt tracker is really just about following calculate what payments you should make or follow what payments you have made. The debt calculator helps you work out what payments are best to make to pay off the debt, and the debt tracker follows those payments to tell you how much is left. So in combination with them all, you have a full picture of all of your debts. And that's the final thing that we need to talk about on this video series. Thanks for listening, and I hope it's been useful for you.